Steve Sousa has been owner and director of Advanced Savings Concepts since 1974. He's a national retirement planning expert and a charter life underwriter. He's been a leading producer for ING, Lincoln Financial, and Penn Mutual. He's been a member of the industry's $1 Million Roundtable off and on since 1978, and he's currently helping his clients enjoy more than $22 million in retirement income. Let's listen in as Steve shares about the downsides of investing in gold. I'd like to welcome Steve. How are you doing today?
Good. How about you?
Good. So, Steve, you were going to share with us a little bit about your response to the advice of investing in the gold market.
Yes, it seems like every time I turn on the radio, there's an ad on there about we're soon going to have a crash in the market and that everybody should put all their money into gold. And it always reminds me of when I had just gotten out of college and just started in this business in 1974. And we were going through a real tough time in the economy at that time. Everybody thought, everything was coming unglued, and we had gas lines, we had runaway inflation. The stock market had crashed, and actually the Dow had gone down to in the 500s. I think it went down to 587. And a headline at the time in the Wall Street Journal was "The Dow is dead." That was the headline. And that's when it had gone down to like 587, I believe was the low that it hit. They were predicting literally an end of our stock market. We're saying, don't put another dime into the market, take everything out and put it into gold. Well, since that time, gold has increased by 6 times. Since 1974, gold is now worth 6 times what it was in 1974. And yet the Dow has gone from 587 to approximately 18,000 that it is today, an increase of like 31 times what it was in 1974. So every time I hear an ad like I did today on the radio, it always reminds me of that day. Our stock market is very volatile. It does go up and down with big swings. In the long haul, it does pretty well, and, the only problem really is when you're in retirement or near retirement, you can't really afford a big swing backwards. That's when you need to modify, and so the question is, what do you do as you get older? And that's where we come in, and that's where we can really answer those questions. We put together a program that solves the problem of stock market crashes for those with their retirement funds in the stock market that are nearing retirement or in retirement. We solve that problem, and we can explain how we can solve that problem for you.
Well, fantastic, Steve. It was good talking to you today, and we look forward to talking to you again.